What's happening, guys? Hope everybody is well. So, I thought I'd start doing a few YouTubes just explaining a few things. So, one thing that I wanted to go through today is how the price of oil is going to affect the Japanese yen. All right. I know it's a topic that might be a bit boring, but it might be a little bit interesting. So, I've done a PDF. So, excuse me in regards to if I am reading through this PDF that I've done, but it's a way that I'm going to do it. And, if you ask me, I will send you out the PDF as well. But why is the Japanese yen so weak? And what does Japan need to do to fix it? So, over the past few years, the Japanese yen has become one of the weakest major currencies in the world. We've seen USD JPY climb above levels that would have been unthinkable just a decade ago. So the big question that traders ask is, why is yen so weak? And importantly, what does the Japanese yen have to do to increase it? So the answer is all about energy, trade, and structure of but basically Japan's entire economy. So let me break it down for you in regards to energy. So Japan has a huge structural weakness compared to many other countries. It imports basically all of its energy. So that is oil, natural gas, and coal. And obviously, naturally, right now, because of everything that is happening, the price of oil, I think it's above 100. It reached $119. So, per barrel of oil. So, as you can imagine, there's a huge issue there in regards to if they're buying everything, then obviously it is more expensive. So, that they're also, buying it in US dollars, which obviously will come back to. So Japan will sell yen to buy dollars to then buy oil. This means all prices, naturally weakens yen. All right. So next problem Japan have. Problem number two is the interest rate problem. So the second major reason the yen has struggled is the interest rate policy. The Bank of Japan kept their rates near zero or negative to stimulate the economy. What does that do? It encourages spending. They want everybody spending. So meanwhile, other countries, like the US, UK, everyone else, Europe have raised their interest rates to obviously battle inflation. So investors can borrow cheap yen and invest that money into higher yielding currencies like the US dollar, GBP, Euro, Aussie, whatever. This means that there's a constant selling pressure on the yen. Right. Next question. Why can't Japan easily raise rates? Well, here's where it gets interesting. People often say, why don't Japan just raise rates to strengthen the yen? The problem is Japan has massive debt levels. Japan has one of the highest government debt levels in the world. So if interest rates rise too quickly, the government borrowing costs will explode. The bond market becomes unstable. The economy slows dramatically. So the Bank of Japan always has to move slowly. And that's why yen has stayed weak for so long. So the solution. What did Japan need to do? What would they need to do to strengthen yen? If Japan truly wanted a stronger currency, there are a few things that would help. Higher interest rates. Gradually increasing rates would make the yen more attractive to investors, but it has to be done carefully because of Japan's massive debt situation. So improving energy independence. This is a massive one. So I'm probably going to say this wrong. After the Fukushima disaster in 2011, Japan shut down pretty much all of its nuclear plants. So basically, it's reliant on everyone. Restarting nuclear power or investing in uh, domestic energy would reduce the need to buy foreign currency, and that would obviously naturally support the yen. So I think long term, that is something that obviously they are going to need to focus on. Increase domestic investment. Japan needs stronger productivity growth, technology investment, and wage growth. A stronger domestic economy, guess what? Attracts global capital and will therefore support the currency. So, currency intervention. Japan occasionally steps into FX markets and buys yen directly, so they buy their own currency. But this usually, only creates temporary moves. They basically buy their own currency to strengthen it, and it's not long term strength. So closing out really, Japan can't speak today. The Japanese yen isn't weak because of obviously only one thing. All right, it's weak because of multiple things: energy imports, interest rate differences, government debt, and a global capital flows. Until Japan resolves those structural problems, the yen will likely remain one of the most sensitive currencies in the FX markets. As for traders, understanding these macros will always really, really help you. You guys know that is what I am very, very hot on. I am a macro trend trader. So I believe personally, if you understand macros, it's like a black and white blueprint on, trading the FX markets, because we're not trading technicals. We're not trading what this pattern might mean, because it might mean something else. If a bit of data is published, that is published. We know exactly what is happening. It's not if, when, where. It is, this is what's happened printed. So that's why if you can understand macros, you're going to have a massive advantage over everybody else. So yes, because oil is flying right now, yen is struggling, and it's going to continue struggling. I mean, they were worried when this war started. I read something that they were going to be worried around $80 a barrel. We have surpassed that massively, and I can't see it stopping. So let's wait and see. But obviously, there's a couple of links in my channel. If you are completely new, you can obviously, have a look at what I'm up to on those links. So have a great day, everybody. And I'm going to try and do more of these. And I do have the PDF. So if you want it, drop me a message. Have a good day.